Hello, everybody. Thanks for joining. It's your friend James Shaw. Trust you're doing all right, and we're ready for a great day. Here's the thing: the market's changing. We know that to be true. Last year, 2022, we saw around a 20% decline in business. Now, volume was up, so a lot of you maybe you took a hit on your units, but made the same or more money. Now, this year, NAR is saying we're going to see another decline in units. Maybe 5 or 10%. And volume might be flat or in some areas go down, which means your money can get impacted if you sell fewer homes, or even if you sell the same amount, your income could get impacted. So now's a time that a lot of people go and say, let me make sure I'm doing things right when it comes to money, and we want to help you do that. And so I'm so excited because Ashley Miller's with us, and she's going to walk through some stuff, and she's a MAPS coach and does so many amazing things. And so Ashley, first introduce yourself to everybody, tell them who you are, and then we'll dive in.
Yeah, hello everybody. I am MAPS coach Ashley Miller. I am an executive coach and a lead coach for MAPS. I am also the head of our teams coaching, and I'm based out of Central. So in addition to coaching, I run my own residential sales team and then own a couple ancillary businesses that provide support services for agents as well.
That's so cool. And you've been with MAPS since like 2018,
Yep.
and got started selling houses in 2015, I think.
Yep.
And one thing that you do is something called Profit Camp. So you're all in, and MAPS does this. You're all in on helping people make sure they maximize their money.
Yes.
Now, when we're selling a bunch of houses and the money is coming in like crazy, it's a little bit easier to not track it because there's just another closing down the way, and you figure it out. And so now we get to a time that more people are interested in tracking their money, right? I mean, we should be tracking the money, but when things get a little wonky, all of a sudden people are going, maybe I should pay attention to this. But it can be overwhelming. So give us some starting pointers. How do we even start if we want to just pay more attention to the income coming into our business?
Yeah, James, I think overwhelm is probably the number one word that I hear when a new client comes in and first wants to start working on their finances, or when they start taking classes to help focus on their finances, is they just don't know where to start. So I've done my best over the years to chunk it down into a really, really simple step-by-step process. The lovely Jeannie Astis teaches this in Profit Camp as well. And one of the first things that you can do for yourself is go print off 12 months worth of all of your bank and credit card statements. And that sounds a little overwhelming. And I realize it sounds big and scary. And yet I promise you, the story that you're making up in your head about like 12 months worth of statements, you're making up a story that's way worse than it actually is. But if you're truly wanting to start tracking or making any changes around your behavior with your finances, the first thing we have to do is actually get clear on what your behavior with money currently is. Gary talks about this in Shift, right? Get real to get right. And if we don't slow down enough to get real about what our current financial habits are and what our relationship with money actually looks like in the present, it's really hard for us to determine what kind of changes or even how to go about making change for the future. So, number one thing you can do, whip out 12 months through and start to categorize something like
Okay, Ashley, I'm going
groceries.
to jump in because we lost you for a second.
Oh,
While you're managing your expenses, you're clearly not spending enough money on your internet. So I'm just kidding. But let's go back. So you said let's categorize, and you want to go
yep.
through what kind of line by line by line and look at certain things.
Yeah, I actually suggest go through by category. It makes the process a lot more efficient. So tackle one of your larger categories first. Something like groceries. It's a simple one. It reoccurs often. And that way, as you're scratching off, you're eliminating a huge bulk of the transactions from the year. So then as you go to the next category and the next, there's fewer and fewer to go through. So gas, groceries, eating out, those tend to be ones that are like the larger reoccurring ones. Knock those out first. Then it'll start to narrow it down to just more of your one-off expenses. And that way you can total up where all your money's gone for the year.
I like that. And so when you do that, you can evaluate kind of where the money is going to see what changes you need to make. It sounds like to me you're suggesting before we go cut expenses in our business, maybe we want to review the expenses in our personal life first. Is that your recommendation?
Always. In my experience, and I can only speak from my experience and the hundreds of people that I've coached through this, more often than not, people are not overspending in the business. More often than not, what we find is when you actually take the time to get clear on your behavior with money personally, you see where you're out of alignment. And some people go through this process and say, gosh, I'm spending way too much in this area. Or they see a number and they're like, no, that's the lifestyle I've worked really hard to build. I would never want to change that number. And that's okay too. But yeah, definitely starting on the personal side, because that's where we tend to see more of the frivolous spending. And then we jump over and look at the business, because the last thing you want to do in a shift is start to cut in the business, when in reality, we may need to continue investing in the business and have to trim at home.
Yeah, I agree with you. And I think that, we have to remember, for most agents who are watching this, the purpose of the business is to fund the lifestyle. That's what they're doing, right? So they're running this business to go fund the lifestyle. If the business isn't producing the results you want, you don't cut necessarily expenses in the business. You go make changes in the lifestyle until the business gets back where you want it to be. That's just my thought. And I got to tell you, at the beginning of the pandemic, I think a lot of people did exactly what you just said. They went through and printed out their statements and went and investigated things. My wife and I did that. Terry and I did it. When we did it, we cut $2,300 a month in spending between business and personal, if you look at those two combined. Because, I was a bold coach. I didn't know when we were going out again, right? At the time, I didn't have the Facebook group that we lead now or any of that stuff. So we went and cut. But I think what happens is, for a lot of people, they did that in March of 2020 or April of 2020. But now here it is, 3 years later, a lot of it snuck back in. So it's time to reinvestigate it. Would you agree with that?
Absolutely. It's actually something that I suggest doing every single year. So this particular exercise in the 12-month, doing it every year, because we do let things creep in, whether it's the app that we decided to subscribe to that 6 months down the road, we forgot that we did it. Maybe it's you had a life change or something happen and you took on a new payment in your household that you didn't have before. And we just don't go back and update that stuff. And so I like the term gradually then suddenly, where money and expenses start to go out gradually. And then suddenly we wake up one day and we're like, oh my gosh, where's all my money going?
Well, let's cut it off now. All right. So where are some areas where agents are spending too much, in your opinion?
The two that I see on the personal side, more often than not, is eating out or groceries. So just food in general tends to be a really, really big one for people. And again, some have worked really hard to build a lifestyle that they can do that. Yet a lot of people, when they see the really big number for the year, it doesn't really align with their values. If you were to hand them a large chunk of money all at once, they go, oh my gosh, I never would have actually allocated that much money to food. So like groceries, eating out, alcohol, I kind of lump those all together. That's the number one. For a lot of the ladies, and I do personally coach a lot of women.
All right, Ashley, we lost you again. So let's see if she's coming back, because I think she's there you are. Okay, you're back. You said food, which I get, but then you were talking about the ladies. What's happening with the ladies that you're coaching? Where are they overspending?
Ladies, the clothing, getting your hair done, getting your nails done. Those are the fun things that we work hard to bring into our lifestyle. And yet what the ladies, particularly the health and beauty, that line item in the budget also tends to be one that's pretty big.
Right. And I'm not going to give advice on what to do there. The only thing to think about would be, any change you make might be temporary to get you through a season, or, is there just another way to pull off the same thing? All right, let's talk about then business. Where is it that we're overspending in our business, Ashley?
Oftentimes in the business, I work with a lot of teams. And so for rainmakers, I see a lot of cost to sale that's actually out of alignment. So not so much an expense as much as it is the way we've set up our compensation structure. A lot of folks were really generous and may have veered off the model a little bit for when they set up compensation structure in an up market. And then what we realize when the market starts to shift is that's actually not sustainable. So that's one I see out. Lead gen is the other that tends to get a little out of whack. And I think that's because a lot of agents don't understand truly what all constitutes as a lead gen expense. Everything from your listing photos to your boosting on Facebook to every dinner out that you run through the business, potentially with a client, things like that. When we start looking at lead gen, kind of how I talked about in the beginning, this is the one area that we want to interrogate first and foremost before anything else in your P&L is go in and interrogate your lead gen dollars and actually go in and calculate the return on investment. Did it produce a minimum of a 4-to-1? Are you nickel and diming like $100 here, $300 there, $500 there for sponsoring events that maybe you just said yes to something that wasn't part of your budget or your plan for the year? But lead gen's definitely the biggest one on the business side.
Okay, I love the advice. I think it's really important, and it's interesting to watch how these small things, right, can add up to big things, because a lot of people will go and look, and I think the first mistake is they cut business expenses before personal. We've got to flip that, cut personal before business. And then when they look at business, they cut the most expensive thing first. Now, this might sound a little self-serving. You're a MAPS coach. I was a MAPS coach, and it's real easy to say, don't cut your coach. But, in Think Like a CEO, Gary and Jay said, you don't cut the things that are helping you in the market where you need help, and a coach is helping you. But it's easy for someone to go and look, oh my gosh, MAPS coach is $1,000 a month. You cost more than that. You're even more expensive than that. So it's $1,000 a month, $12,000 a year. Unless with actually might be double or triple that amount of money. I'm just, you know what? I'm going to cut it. Not smart, right?
Wrong. Yeah, don't do that. And here's why. If we are as smart business people, and James, I'm going to guess that 99% of the people that are plugging into this call are really smart business people. Doesn't mean smart people don't struggle from time to time, but you're smart business people. And there are very few things in our business that are actually expenses, right? Like true expenses, money that it costs to operate that doesn't actually bring any value back to us, just costs us money. Every dollar that goes out should be treated as an investment. And if you were to go put money in a piece of real estate, you are calculating what your return is going to be, whether it's you can sell that property for a profit, it's going to cash flow for you. If you were to put money in the market, so out into stocks, you're going to be monitoring that and looking at the returns and the interest that it's accruing for you over time. And yet we don't think of the money that's going out in our business the same way, that every single dollar that we're putting out, we should be looking at what is the return that it's bringing back. And oftentimes, and your coach is no different, right? Coaches are no different. Whatever lead gen you invest in, sometimes people invest in online lead gen. Some people invest very heavily in events in their database. There's no right or wrong for how your business is built. You just simply want to hold those dollars very accountable to producing the highest possible return. And sometimes it's just looking at how can we keep doing what we're already doing, but differently? Or how can we take dollars that are going to a spot that's maybe just not producing as much of return and move them somewhere that it can produce bigger, better results for us?
Yeah, it's really smart. Okay. What about some tools that you'd recommend? What are some things we can do to kind of help us track expenses, set up a budget, stuff like that?
Yeah. One of my favorites, and this is just total personal recommendation. One of my favorite things out there is called YNAB. It's youneedabudget.com. There is an app associated with it as well that you can just plug on your phone, which makes it super simple. And once you've gone through and done the work to know all of your expense categories and you know where all your money went, it's real easy to take those totals, divide them by 12, and now you know your budget. Now, some people want to make changes to that budget, and that's fine. YNAB is just a really great tool that allows you to go in and set up your own personal budget. You can customize it. It links to your bank account. So you can do this for the business as well. You can have a personal one, you can have your business one. And the thing I like about it most is, and this is where I see people fall short with money management, we're really great at looking at a profit and loss, or when our credit card statement sends us the little circle graph that tells us where all of our money went, what we already did with it. Where people fall short is actually telling their money what to do as it comes in. So the cool thing with YNAB is that every time you have a deposit that comes into your account, say, let's just say you deposit a $5,000 commission check, you can actually break that $5,000 out into smaller segments and you drop them in the buckets. So James, you could say, hey, $1,000 is going to my mortgage. I need $300 for my power bill. I'm going to put $500 in my grocery bucket. And you start to allocate your money for the future. And if we're really proactive, this is where you start allocating for things like maintenance on your car, maintenance on your house, right? We just start dropping bits of money in a bucket to be proactive. And that way, if you need new tires, or the furnace goes out and you got to call the maintenance guy, it doesn't feel like a setback because you've actually been budgeting for that all along and being proactive in telling your money what it's going to do, as opposed to just looking at your bank balance and going, cool, I have thousands of dollars, and not really knowing what its purpose is.
That's really good advice. So it's youneedabudget.com, YNAB. So you can go download the app, and YNAB is what they call it, but YNAB is where you can find it. It sounds like, telling the money what to do is really smart, especially come, tax time, right? To be able to allocate and be prepared in advance for taxes. What advice do you have around that?
So I coach a lot of my clients to make sure we're actually doing that per deposit, right? You don't want to wait to the last minute to start preparing for taxes by any stretch. So just making sure, again, how we talked about putting money in buckets. Every time income comes in, you should be working with your coach and your tax professional to determine what percentage of that should automatically go to your tax bucket. I also suggest keeping that in a completely separate bank account, not just a bucket in a digital platform, but truly in a separate bank account so that you don't get tempted to use it. And that way you're proactively planning. I've had some people that they end up surprised at the end of the year, right? We've maximized their expenses and write-offs in the best way. And some of that tax money actually just gets to come back to them as like a little bonus at the end of the year instead of going to the IRS. But worst case scenario, they're fully prepared. They send off their P&Ls to the CPA, they write the check, and it's just another day versus a very stressful season in the year. So just being proactive and doing that per deposit can help a lot. And if you haven't been doing that, it's not too late to start. Just start that with your very next deposit, and you will be shocked at how far ahead you are by the end of the year.
Super smart. I love it. I love that you're talking about budgeting and preparing. For our Inspire members, you're sharing a budget worksheet. So for those of you who are members of my Inspire Collective, you can go into the member dashboard at jamescshaw.com and download Ashley's budget worksheet. What kind of final pro tip do you want to share? And then also let them know how they can connect with you, or maybe some stuff you might be able to help them with.
Yeah, absolutely. I would say final pro tip, if you're going to take this seriously and really spend some time reevaluating your finances, get clear on your behavior with money. Step 1. Step 2 is have a plan for reducing any debt. That's part of your budget if you have payments going out. Yet we also want to set a plan to help you guys reduce any debt, especially as the market shifts. We don't want to build debt. We'd rather reduce it. And step 3 from there is just, it's work with your coach, right? Work with your coach, work with your spouse, have these conversations regularly, and make sure that you're spending time with your money. I highly recommend putting in your time block like Money Monday or Financial Friday. That's what I do. So that you force yourself to sit down and just spend time with your money. Some days you're going to spend that time paying bills. Some days you're going to spend that time reading a financial book about investing. Some days you may spend that time actually working on updating your budget worksheet or updating like your YNAB accounts and your buckets. How you spend the time isn't nearly as important as making sure that you are consistently making time to stay in relationship with your money on a regular basis.
Well, you've given us great advice today, so I appreciate you so very much for doing that. Thank you. Now's the time to go and look at those things and get things together. And so, Ashley, thanks so much for sharing with us. And to our Inspire community too, go log into the Inspire member dashboard at jamesdshaw.com, and you can download her budget worksheet. If you're not an Inspire member, then think about hanging out with us, right? We're doing things to try to support and help you. We're not a coaching community. That's MAPS, right? We're a mentorship community to just learn from each other. So if that's something you think might help, go check it out at jamesdshaw.com. Thanks for watching, and we'll see you next week. Have a good one, everybody. Bye-bye.